The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Tommy O'Brien. It's Friday. It's 10 a.m. Eastern Time, and I'm fortunate to be joined by our man Basil Chapman this morning for the hour. Basil, good morning.
Good morning to you, and how are you?
I'm doing fantastic. Seems like we should have a few things that we can talk about this morning and this trading day about what's going on. And to start things off, so right now we get the Dow up about 493 points, trading 23,179. S&P's up 52 points, and the Nasdaq up 155. All the major indices up more than 2%. Big jobs number this morning, of course. And to start off with that number, jumping over, 312,000 jobs added in December. The expectation had only been about 176,000, so big number there. You had some wage growth, 3.2% from a year ago and 0.4% over the previous month. The year-over-year increase is tied with October for the best since April of 2009. So that number comes out at 8:30, Basil, and of course things accelerate. And even let's just jump over to some of the charts before we have some discussions. But really, what was interesting as well, I mean, big action. You had some dollar strength, euro weakness, but gold pulling back dramatically, hitting 1280. You have crude trading dramatically higher, almost up to $49 we haven't seen in a while. So lots going on. What have you been taking a look at since we got that number this morning, Basil?
So there are a couple of things. First of all, the story before we had the report was that a good jobs number could tell the Fed that they're on the right track and that they're doing the right thing.
Yes.
So there was some nervousness. I don't think it was estimated that if the number was very good, almost double what the general anticipation was, in the like 150 to 170 area, does that mean that this economy is actually humming and everything is just great? Does it mean that there was a lot of employment, of course, going into the holiday season, and that's going to drop off in January?
Yes.
So those are the questions. So I think that we must just treat this as a market that has had intraday some of the whippiest action we've seen in a long time, and that we've got to look at the numbers. What does the Dow settle at within about 2 to 3 sessions? In other words, it's not so much what happens today, because yesterday's selling, I'm showing a chart here. On the left is the Dow daily, in the middle is the weekly chart, and on the right is the Dow monthly chart. If you look at the daily chart, the low that was made on the 26th of January after the 19% decline from the all-time high of 26,951 to the low of 21,712, that's a 19% decline. The rally was very strong, except if you look at it, it was only giving back some of the losses that were made over the 4 days going into that low.
Sure.
We haven't even gotten back into the candle where it already started back in the 19th of December with a high around about the 24,000 level. So we try to put it into perspective. Not all that much has changed, but it will change for me if two things happen. One is you see that the low that was made on the 26th here, you see that the MACD, the moving average convergence divergence, that had already made a low. It was trying to turn up, and the stochastic was way down in the single digits. Now, single digits is equivalent to, on the downside, is equivalent to the single digits that we saw on the upside, just without changing too much. You can see here in the weekly chart, when the stochastic was up in the 90% area all the way through from late July into the very first day of October, look what happened to the price. It ran up sharply. If you look at the monthly chart, look at how the stochastic from July of 2016 was up in the 90% area, and it held steady.
Yes.
So the equivalent of the strength of the upside for me with the stochastic, now on the downside going to the single digits, it was important for me to see a rally, and the rally to go over 20%. Now the stochastic's at 46%. So even with the sharp move down yesterday, the technicals, the MACD crossed positive, the stochastic was good. So I'm looking at this and I'm saying, hey, I like what I see, but it's not good enough. I want to see trading in the 23,550, maybe 23,600 level by sometime the middle to the end of next week. And then I'm going to say, great, now we've got that counter trend rally. Or forget about jobs numbers, forget about everything. Look at it as if you've broken key resistance. You're up now in areas where there is the next support. So the resistance is up in the 24,000s, and I'd go step by step because the MACD and the stochastic will be moving very nicely to the upside. A break below yesterday's low of 22,630. Let's say a close below 22,600 says, uh-oh, watch out, there's that arch formation, and there's a good chance we can go much lower. So I've got parameters to watch, but I do like the fact that the TLT, which is, you were talking about this a moment ago, the TLT bonds.
Those bonds
really screamed up to the high yesterday of 120. I think it just touched 123.86.
Yeah.
And now, so this could be an inflection point, and that's the reason why I thought today would be a really critical session for a lot of things. Look at the screaming to the upside in the weekly chart of the TLT. Now, if I put that together with gold, and these are the instruments that have been moving up as the market's basically been moving down. Look, gold down $13, not a big deal since it's been up almost every day for a while, but it could be pulling back a little bit here, and the weekly chart screamed to the upside as well, broke out of resistance. So this is going to be important because there could be an inflection point that says, wait a minute, there's a chance now. Gold takes a bit of a breather. The rally in the bonds allows the yields to rally a little bit as bonds come down, take a bit of a breather. I'm looking at the dollar DXY. You were talking about crude oil. So the dollar's still stuck in a really nice range up at the top. I'm still saying, I can't measure it, but my guess is that countries are buying the dollar as security, not bonds. They're buying the dollar. This seems to me it's been on a look at the monthly chart, how strong the technicals are on the dollar. So that's something I'm going to be watching closely. And you mentioned crude oil. This is the first big break to the upside in crude oil in a little while. But even here at 48.72, up $1.66, you really need to see a climb into the 50 to 51 area to say, hey, this has now got a little bit of substance to it. So it's a very important week. The closing price today, all around, on the Dow, on the TLT, gold, just crude oil, everything's very important. XLF, the financials, usually the financials move down when the yields go down. No, the financials have been really quite strong over the last couple of days. This is a very interesting market, and I think that for subscribers, we're trying to place ourselves in certain areas that are, I wouldn't say under the radar, but they might avoid the whipsaws that we've seen.
And, you know, and it will be interesting, too, you're talking about where we are next week in the Dow. Really, the full market really kicks off on Monday. I mean, we had New Year's Day on Tuesday. We still have our man Dave White. He had gone on vacation during the holiday. He's away today. He's back Monday, right? A lot of people back Monday. Kids at school. Most of them back after the New Year. So we'll see what happens come Monday. Folks, Dow up 433, S&P's up 48, NASDAQ up 150. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everybody. Tommy O'Brien, joined by Basil Chapman this morning. We have the Dow up 431, trading at 23,117. S&P's up 47, and Nasdaq up 148. Those gold down about 13 bucks, silver off about 10 cents, and oil up $1.56. Basil, I got a chart of Apple up here. Quite a decline from 233 on October 3rd, so you enter, exactly pretty much the final 3 months of the year, right? October, November, December, and 142 yesterday from that number. What do you see going on in some of these FANG stocks, and Apple in particular, of course, starting the new year off, really a dramatic revision Wednesday night to start off the trading day, and how do you see that maybe coming into where this market's going?
So I would like to treat Apple as a separate entity in the sense that the rally that it had starting in May of 2016, around about the, what was that low? I think it was 89.47.
Yes.
Ran all the way to 233.47. I would say that that's a pretty decent rally.
I would say it is as well.
So, and really, when you look at this chart in the monthly, it's really straight up. If you look at the 9-period exponential moving average, it's a green line when it's in a positive mode, and it goes red when it's, or pink when it's negative. You'll see that the moment it broke out, that was around about September of 2016, went to the 116 area. It's tackled the 9-period moving average, but never closed below it until that really ugly candle of November. So it goes straight up. In my work, peak D is really important, the fourth highest peak. Other things can happen after that, but that's where you raise your foot off the accelerator, hover over the brake just to see how it handles that. Well, it didn't handle it well. So it came down. You can see the MACD crossed really negatively, and the stochastic went from the 97% area. Now it's at 43. And that says to me, regardless of what happens in the shorter term, that monthly is going to take, I've called these for the FANG stocks, hat-trick tops. And what I mean by that is when I'm getting close to a D, E, or F in the monthly chart, I look back to see where the weekly chart is. If that's also in a DE or if I'm looking about to get toppy, then I look at the daily. And if the daily starts off with a sell signal, that'll trigger a sell signal and then goes to a sell mode. That's probably going to go to a sell signal and then a sell mode in the weekly, and that leads to the monthly. So it's a stair-step or a sequential way of looking at it. But once that monthly goes, that's the third one. We call a hat trick top. Goes back to the old cricket days. You use it here in the United States as well, but we used to use it in cricket for a hat trick out. And in this particular case, the FANG stocks have all made monthly charts that look to me like they need time and they need price. Maybe the majority of the price is now done, but they definitely need time. So when Apple came out with its news, it kind of was, in a way, it was the cherry on top for the negative news that was coming out, but the Qs had already been coming down. It impacted the Dow a little bit more than it should have yesterday. I'm looking at it and I'm saying, Apple is a mature, I've been saying this for about a year now. I've said, Apple is a mature company. Think of it like the old General Motors of the 1920s that goes into the 1930s.
Sure.
As a mature company, whereas there were thousands of automobile companies. It's hard to believe, but here in Massachusetts, there were like 200 or 300 automobile companies in the late 1920s, and then eventually you got to your major three.
Yeah.
So I'm looking at this and I'm saying, that's going to happen in the whole computer industry. They're going to whittle it down, whittle it down. Apple is a mature company. Now you have to look at it kind of as a dividend stock. All I'm thinking now is that Apple needs time. It'll probably be back as a leader, but I think that a chunk of its leadership role as a cutting-edge technology could well be behind it. It's going to take a lot to change that.
I would agree with that notion on a fundamental. You know, the iPhone changed the world, right? And unfortunately for Apple, they are a premium product. Now, I love the iPhone. I have an iPhone. But they're a premium product, $800 for a phone, $1,000 for a phone. And when you start talking about sales globally, and you have firms, and sometimes they're in China where you're trying to compete, that are those phones, let alone in the U.S., the Android market. You know, Tom, my dad, has an Android phone, right? I mean, they compete, and they usually compete. I have an Android phone. I'm happy. Yeah, exactly. And they usually compete at a cheaper price. And Apple had the great business model of having, you know, carriers subsidize those phones on a 2-year or a 3-year plan, whatever it is. Those don't exist anymore, and so the prices.
They did talk about trade-in. They've never done that, not to my knowledge.
And it's not good signs when they're trying to pull out all the bells and whistles, right? They discounted for one of the first times at the holidays. They told investors that they're not going to announce iPhone unit sales anymore. Those
I wonder why.
Yeah, I mean, huge, dramatic. And we had said to Tom that the market really should have been more afraid of that announcement. And they were afraid of it. It was not received well. But it should have been received with even more criticism and angst for the stock, because it really pinpointed. And they have lost, I was just looking at a variety of articles, even during the break, they've lost $452 billion in market cap in 3 months, which would eclipse almost any other company. You know, there's only a few companies, I say a few, there's more than that, but that are worth more than $500 billion. Apple's still one of them, but that's worth more than Facebook is in its entirety, to put things in context. So just remarkable loss. And I would say you're right, they have some repair to do. And I think they need to just work on making sure they can maintain that dividend, you know, story.
Yeah, and you know, it's time that they need, and that's really what I'm looking at. I mean, let's face it, Google. I always say Google. It's very hard for me to say Alphabet. I don't know where they got that alphabet from. So Google, Alphabet C stock, social media, trading up $28. Look at that monthly chart. Peak F comes down quite sharply from the from the 1273 high, pulls all the way back to the most recent low of the 970s. That's a big move. It's one of the biggest moves it's had to the downside, certainly point-wise, maybe not always percentage-wise.
Sure.
But it's here to stay. I mean, Google, these are the companies of the 21st century.
No,
you can't write them off.
No.
So I'm just saying, in the short to, I'm calling it now intermediate term, I think they need more time. It's not a big deal. They just need time. They had a fantastic move up.
And they're trying to make that transition into more services, right? They have almost everybody's credit card in the world tied to your iPhone account. I joke, but mine is, you know, and that's something like that where you can have services, let alone their cloud and all that stuff. So I would agree. I'm a huge Apple fan. But
the other thing is, what will Google be doing that really cuts into some of the other technology companies. And you never know. They come up with some big surprises.
No.
They've got all the wherewithal to do almost anything they want.
No, they have so many, like Google Labs, right? They have Waymo. Right. Is that Waymo? Their self-driving car unit.
That's right. And what about phones? Wait until they really get. I've got a feeling they're going to pull something here, and we'll be looking at a Google phone of a magnitude that is different to the others, because they have the information to put it in very easily into anything they want. They do, just like an Apple has in here. And then Microsoft, which has been a powerhouse as well. Not that big of a pullback. Isn't that interesting? They made such a great transition into services, and that's what's held. How they did that. I mean, I'm looking at it, and it's holding very well. Quite a chart even over the last 12 months, trading from 50 all the way up to 116. And it's only 16% off the highs. When you compare it to some of those other stocks, that's not much at all. Folks, come on back. We got markets in positive territory. Basil will be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien with Basil Chapman. Basil will get another leg up. We'll get into the reasons why, but we got the Dow now up 623. S&P's up 70 points. That's almost 2.9%, and the Nasdaq up 216 points, or 3.34%. And to jump over to the headline, you have the chairman of the Fed speaking today. So to put things in context, he's got headlines coming out as we speak. So he's talking about the Fed will be patient with monetary policy as it watches how the economy performs. He is out there speaking with his immediate predecessors, Janet Yellen and Ben Bernanke, at the American Economic Association's annual meeting in Atlanta. So along with that, another headline that he would not hesitate to tweak balance sheet reduction if it was causing problems. I think the market really likes to hear that. Of course, we heard from him prior that the Fed reduction, the balance sheet reduction was on autopilot, Basil. Doesn't seem to be the case anymore. And we just have the Dow trade from 23,024 at 1020, and we just popped 300 Dow points. Is that right? Yeah, 23,300. 300 Dow points. Going now, we are 600 plus points in the positive, 650. Quite a number, Basil.
And testing the 14-period moving average, which has been the repellent for a little while here. So this is going to be very important because, as I say, the MACD did cross positive. Stochastic's improving. This is the balance that we've been wanting. But what's really, I think for investors, there's one attitude, and for traders, there's another. And it's incredible how volatile the turns have been. And very often, if you hadn't been in the position at the close of the previous day, you missed a chunk of the move. Because
sure.
Look, the low yesterday in the Dow was right there at 22,638.
Okay.
And we closed just a little bit above. We closed only 50 points above, 22,686. Today it opens at 22,894. So, and then the day before you close, oh, look at the day before, you closed at 23,413 on the Dow, and you opened at 23,176. You know, and if you were wrong, in other words, let's say you anticipated that every day it's going to be the opposite, and yesterday you did buy the low, and then for the first time the news was perceived as bad, you'd be stuck with a huge gap down. So you have to actually be watching 24 hours a day to really be able to trade the trends. Because if you get in at the open the following day, that's kind of negated, even if you had a fantastic day. Look, even if you shorted at the open yesterday, right now you're underwater. Big.
No, it's huge. And what I just pulled up even, I mean, like you're saying, you know, we're at, I think you just said the 14-period exponential moving average. To pull back up, I'll get it back. Where am I? I just had the chart. There we go. Of the Dow, and it's pretty remarkable that we're now back to right where we were practically before you got that Apple announcement, which was a pretty dramatic announcement, of course, and it's remarkable that we've clawed it all back to 23.3. We traded down to, like you said, about 22.5 last night. That's the low at 7 o'clock last night, 22.5, and we are now at 23.269. Quite a number.
Right, and so in terms of the trades for subscribers for my opening call, what I did is about a week or so, I think it was about a week ago, we bought a call position, a January option call, a 228 call, because I said to myself, you know, anything can happen, go down, it could go up, and this way there's a kind of protection for the upside if it wobbles around like it did, but you've got an entire, we've still got another week or 2 weeks.
And what level was the call at again, Basil?
That's 228.
Okay.
That's 22,800.
Yes.
Now the Dow's at 23,262. So that's working out. It was down yesterday. It was up the previous day. This is the only way I thought you could play it in terms of looking out and saying, that's where I think we're headed, towards the upside. And if we do, this is a better way to play it. Otherwise, you get stopped out intraday.
Yeah, no, and I just pulled up the VIX, 23.26. Not a bad number when you have 600-point moves in either direction. Now we've just bounced, you know, tremendously, but the premium in some of these products, if you're expecting dramatic moves. It's remarkable that we've become so accustomed to, I mean, you have the Nasdaq up more than 3% right now. It's almost becoming a standard move, and yet the VIX not where you might imagine it with those types of volatilities, and as I said, in both directions.
And the VIX still in the 20s says that there's the buying of protection. So once it starts to go to the 19 and the 18 level, I think that ameliorates some of the selling pressure a little bit. But you can understand why fund managers, or at least hedge funds, I think, are the ones that probably need to say, hey, we need to have some protection here.
Yes, right. I mean, it's these moves, and it doesn't seem like this is going to end anytime soon in terms of at least the volatility in both directions. We'll see where that happens, because it is so interesting. Even like you had mentioned, the jobs report that could hint to higher interest rates, but then within 2 hours of that, you have the Fed chairman coming out and saying the balance sheet reduction might not be on autopilot, and the variety of factors that the market's trying to price in.
Well, don't you think that the real issue here is that if the job increase, the 312,000 in January, is still up in the 270, 260 area, it comes down because of the seasonal job positions.
Sure.
But in fact, it comes down, but it only comes down a little bit. That's going to say, and I've got an indicator that I call my cash index. It's not really an index, it's only 4 stocks. But if you look at Cintas, which is really, this is overalls, uniforms, rentals, 217.34 was the September high, plummets down to 155. I mean, that is quite a decline. And now it's running somewhat, but it's still at the very lower end of the range. That's telling us that it kind of goes with, if you look at Marriott, MAR, goes from 149 to, even now it's down, it's up today, but it's down the 106 area. That's a 50 points. That's a pretty big move, a third. So that's telling me that there is, I've called it a rotational recession. I don't think recession is the real word, or slowdown, because if you were in, say, the overall business, or if you were in something like the hotel business, the resorts, anything to do with
how about the airlines? Do you ever look
vacations? I was going to go
combine
to the
those because they had a tough day yesterday.
Yep, let's go to XAL. Look at this. XAL is trading, has a high up in the 120. What was that? Just about 110. Plummets down to the 86 area. That's a big move.
Yes.
So I think that if the Fed, so I'm saying this cash index. You go to Amazon. Amazon's in everything, right? Amazon went from 2050.50 in September down to a low of 1307. That's a pretty big move.
That is a pretty big move. I agree.
But look at the monthly chart. It's still pretty decent at this particular point.
Yeah.
So, and the last one was Home Depot. The housing sector has just been walloped. 215 down to 157s.
And as you said, they've all had just mammoth runs up prior to that. Even the previous 12 months, Apple, all of them. Look at that Home Depot. Folks, Dow's up 596, S&P's up 66. We'll be right back. Come on back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Basil Chapman with Tommy O'Brien. We got the Dow up 572, S&P's up 63, NASDAQ up 205. The market liking what they're hearing today from a big jobs number, liking what they're hearing right now from Chairman Powell speaking and saying that they will be patient as monetary policy watches what happens and that balance sheet reduction might not be on autopilot, as we first thought. So what else, Basil? I know you're going to be filling in for Tom as well today between 3 and 4, which should be nice. I'm sure you'll have plenty to talk about there as well. What are you looking for as you go through this trading day, and what do you plan on talking about? A little tease, if you could, for some of the viewers out there.
So I'm looking at what's working right now. I want to see whether the IAI, let me just put that in here, that is the this is the iShares Broker Dealer and Security ETF is working well, and it's up today. It's up 1.54 at 56.87. That's a good sign. But look at the it went from 70.58 down to the most recent low just a week and a half ago of 51.96. You know, these are big moves to regain, to really start another mega bull move to the upside. I think we still need a lot of work, but this is kind of a clue for me, what we're looking at, because if you can start to see the broker-dealers holding strength for, I would not put it for a day or two, I'd say for 2 to 3 weeks, that's starting to say, you know what, there could be this whole rotational aspect to the market where you've had the Dow make a high in January of last year with the New York Stock Exchange, the big, broad, very important New York Stock Exchange, and then it spent the rest of the year trying to get to a slightly higher high in October, which it did, the Dow, but the New York Stock Exchange didn't. These are big divergences because,
Sure.
You know, you can't just dismiss as out of touch New York Stock Exchange. It's got over 2,000 stocks.
No,
it's a big deal.
yeah. I mean, I know Larry likes that a lot, taking a look, because it is just so diverse and a representation of everything you're dealing with.
Absolutely. So I think it's a structural move. What I mean by that is that the stocks and indexes that have had the longest digestive phase from their highs, because it's been rotational highs. If you look at the semiconductors, not acting as well today, yep, up 2.8% at 84.98. But this chart, the weekly and the monthly, are saying they still need more time, but each one has been making high. You know, you make lows like the March of 2009 low Yeah, it's like a simultaneous low, and all the lows that we've seen are usually simultaneous. Sometimes you get an October low in one index, like the semis, and then in a March, when there's another retest of the lows, that index might not make its low as some of the others, and then you start a big move. But most of the time, over the last year or so, we've been making these rotational rallies and rotational corrections. So to get a unified low, I think you need the FANG type stocks to digest the gains a little longer. So I'm saying that probably February, March is where the most important timing-wise aspect is going to come in for me, because I want to see a synchronous or very close to synchronous low of really the most important indexes, and then we can start another move. It might take longer, it might be shorter, I don't know. I'm just saying that's kind of what I'm looking at. Look at the way the SMH has just touched the 200-period exponential moving average, try to bounce off it, but the technicals are still very weak. And I think until you can get semis are really part of the world economies, everything these days has tons and tons of chips.
And I wanted to mention it. You're talking about so much great stuff. So on the front page of TFNN.com, I know you have your two-part webinar all day, and that is a couple weeks, Wednesday the 23rd from 9 till 4:30. And so some of the points are referenced on the front page, folks. I encourage you right on the front page, TFNN. You can either click on Basil right there, click down here, brings you to the order page actually, and there you can kind of really dig into what he's going to be talking about. Basil, so if you could give viewers, listeners, subscribers a glimpse of what you're going to be dealing with in those 2-3-hour sessions that you'll be doing Wednesday, the 23rd of this month.
There'll be a couple of pages that'll be sent immediately.
Okay.
That they will look at as preparation. So this is Chapman wave techniques. What we'll be looking at, this is just very interesting that you've mentioned that. So I'll just show this. Look at this big arch formation. I'm going to be talking about the market has arches and cups. Yep, it could be a V-shaped pattern, but basically you go from a low to a high, and then you come back. Very often you come back and test that low. Sometimes you can do it in exactly the same number of bars. And look at this one here. If you go to the top that was made the week of March the 16th in the semiconductor index, SMH is at 114, and you go to the low that was made back in July of 2017 at 80.92. Look at the number of bars. We did it in just about a few bars less.
I like that symmetry. I've gotten used to that.
I mean,
really,
that symmetry is...
us doing the shows together has really let that sink into my head, man. I think about it all the time because so often I see that chart. So go ahead, but another great example for sure.
And even though you think, oh my God, crashing to the downside, then you look at the chart, you say, no, wait, it went 32 bars, it could be weeks up. But 32 bars down. How it works is just incredible.
So let me ask you, Basil, I wonder this myself, like looking at your SMH and looking at even the monthly you have right here. So there's the symmetry at the top, you know, very, very clearly to see, as you were just pointing out. Now, does that symmetry apply towards the left side of that? As in, do you look for an extension further down to mimic what, you know, that enormous run up, or how does that play out?
Oh, very good question, because that's exactly what we're going to be dealing with, because we're using...
Well, I'll be in there that day. I'm already signed up, man, so I'll be there, but go ahead.
That looks for the breakout of that resistance or support line. Now look at this. The MACD is still very weak in the monthly chart. In fact, look at the expansion between the red and the green lines. The green is the 9-period exponential. This is the differential between the moving averages. Yeah, the red one's the slow one. And look at the stochastic running all the way down to 30%. So that's saying to me, the work is not done to the downside, and I chose to make the low, this whole area, July of 2017. But I'll teach you how to, where you use the bumping off point to start your measurement. And look at the measurement in terms of, there's a Chapman wave inside wedge target, support line in this case, because it's coming down. I'll teach how to use that, and that will give you the point of contact between the horizontal line and the projection of the downtrend line. And you can see how it worked here in the weekly as well.
Yes.
So that's saying that I'm teaching you a technique on projections. I'm teaching a technique on what can keep you in a trade. For instance, we've been long the dollar since April, the very beginning of April, DXY. Now, that's a long time for a currency. And each time we went from the daily chart, and that went all the way to, I always look for those peak Ds, but that kept going higher, which meant that the weekly chart took over. I hand the baton over in time frames from daily to weekly to monthly. We'll learn how to do that in a contracted time frame in the webinar. 2-minute chart, 5-minute chart, 10-minute chart.
Perfect. Folks, check it out. Front page of TFNN.com. You'll be growling and prowling with Basil all day on the 23rd. And come on back. We'll be back in 3 minutes. Wrap up this hour. We got all markets in positive territory.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's Setup 9 Count and Trend Lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow up 592, S&P's up 66, NASDAQ up 216, NASDAQ up almost 3.4%. And to jump around to some of those FANG stocks, you got Apple clawing back up about 3.1% today. How about Netflix up 6%? Quite a number. We talked about Alphabet or Google up 3.1%. Microsoft up, come on, jump in there. It's up a decent amount, 4.4%. Quite a number. And we were talking about workshops. I'd like to just give our man Steve Rhodes a plug on the front page of TFNN right next to Basil Tuesday night. He's got a workshop with subscribers mastering the TD Setup 9 Count. Get in there, sign up for Steve's newsletter. Comes with a 30-day money-back guarantee. And, of course, congrats to Steve again. Named 2018 Timer of the Year for that S&P by Timer Digest. So get in there, get ready for 2019, and then jump in there for Basil's full-day course, and he will send you over what you need to get started on that journey. Well, Basil, we're starting off the first week of trading in 2019 with some flair, that's for sure. We'll see where today leads us.
So well put. I like that.
But I imagine that by the time your course rolls around on the 23rd, we'll still be dealing with some volatility because these markets have a lot to figure out, man. There's a lot of conflict in the market. There's a lot of conflict politically. There's a lot of conflict geopolitically. But each one has to be resolved independently. And if you look at the market is just reflecting what's going on. And you can hear, I mean, a bit of good news, boom, you got the move up. Bad news, boom, you got the move down. Oh. It's the amount of, it's a percentage each day that is something we haven't. And we have a new Congress, right? We have a new House. You're talking about politics. You have Powell out there today getting asked questions if he will resign if asked so. His answer was a definitive no, so they're all merging.
Was he asked that?
He was worried about that. Was a recent article. So as you say, they're coming. Basil, thanks so much for joining me. Always a pleasure, man, and we look forward to the programs later today.
Thank you, Tommy.
Thank you. Stay tuned, folks. Fast Market, Basil Chapman, live programming till 4 o'clock. Have a great Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.